I just want to quickly take a detour and touch base with Dinanath Dubhashi, who's L&T Finance Holdings Chief, to get a quick perspective on how their earnings have panned out. Great to have you, Mr. Dubhashi, on the show. You know, profit growth has been strong despite Ind AS implementation. What has led to strong profit growth?
Okay, as I always say, and I have been saying for the last 8 quarters, profit growth comes from very fundamental and simple factors, especially in a lending business, which is a simple business. So profit growth comes from doing the right businesses, continuously improving your competitive position in those businesses, which reflects in book growth, which is at 27% this quarter, which also reflects in the NIMs plus fees that you are maintaining. And you would see that in spite of rising interest rates, our NIMs plus fees is up sizably from about 5.8% last year to 6.6% this year. The next factor which has come in the profit growth is our cost controls. Our cost to income ratio is at 23.4%, and as you would remember, just 2 years back it was in the 30s. So it is at about 23% now and steady there. This is despite taking certain costs based on the Ind AS like ESOP cost or the preference share dividend in the interest cost. And last but not the least, a very smart improvement and continuous improvement in the asset quality. This is what has led to this profit growth. Our ROE now is at around 18.45%, which we believe is now in the steady state range. Profit totally is about 538 crores, which is a 71% growth. What is important, and I'm sorry for a little longish answer, what is important about this Ind AS implementation is to, there are many changes, but the important change is to see the way we recognize stress and the provisions on the stress.
Yeah, and you've highlighted that, you've made higher provisions on legacy stressed assets as per Ind AS, which means that you're pretty much done away with that high provisioning with this quarter's adjustment.
Yeah, it is complete. That legacy infra stress asset provision journey is complete.
What I understand about the gross NPAs, because they've come down on a year-on-year basis because of the new accounting standards. However, what would you say was the impact on a sequential basis?
So this is Q1 to Q1, that's what you mean. If Q4 to Q1, of course, all those calculations are still being done because the last full year has to be restated. So that's, it is not comparable at all. Quarter on quarter, Q4 we were talking about NPAs. Now we talk about gross, stage 3. So the only comparable number at this point of time is Q1 last year, and that has improved. The important thing to understand is every business, be it rural, be it housing, or be it wholesale, there is a constant steady improvement of both gross as well as net. So as you rightly said, gross stage 3 has reduced from about 11.7% to 7.9%, and net has actually halved from 6.1 to 3.2%. We actually can assure really that this is what, since we have recognized all the stress and we are taking provisions very aggressively according to our model. So the provision coverage ratio overall has improved from 51% to 62%. And in addition to that, there are provisions that we have made for unforeseen event risk, something like a demonetization that can never be put in models, right? So we have taken a 90 crore provision this quarter for preparing for unforeseen event risk. So with all these safeties built in the balance sheet, we believe now that this gross as well as net stage 3 will continuously quarter on quarter come down from here.
Okay, your AUM growth has also been strong, led by rural as well as the housing segment. What's the outlook ahead for the next few fiscals, and which segments would you say would aid that kind of growth?
Same, I mean, we believe that, so, it's not as if only rural and housing are growing. Rural, housing and wholesale all are growing. But wholesale, we manage the book growth through a strong sell down desk. So we book the asset and sell it down. So all three businesses will grow. But definitely the higher growth in book The highest will be of rural, followed by housing and then by wholesale. This is how we will actually shift the portfolio towards rural and housing.
Right. What has been the Indus impact on net worth, your preference shares, as well as, by virtue of that, your return on equity?
Okay, see, ROE all the while we were measuring only at returns to equity shareholders level. So even though there is a sort of nominal effect on PAT, because initially preference share dividend used to be taken from PAT and now it is taken for an interest rate. Even before, we used to calculate ROE at return to shareholder level. So that ROE as such doesn't get affected by that at all from our previous way of calculating.
Mr. Dubhashi, we wish you the very best for the future. Thanks very much for being so candid about your business plans and your strategies in this conversation.